Welcome back to Market Day Report. So glad you're with us here on the final day of 2024. All right, what's happening with the markets? Let's go to Chicago, where we trade corn futures. Overnight session higher. We've started the morning higher as well. The old crop, 4 1/4 higher. That's March at 456.5. And next year's December, 443, just one tick off the day's high, trading 4 cents higher on the session. Soybeans have been higher as well, up 3 1/2 for up month of January, 985.5. March, most active, 998.5. It's up 6 3/4. May, July, and August are all above that 10 handle. Soy meal contracts have been pretty hot this month, gaining 10% and higher here in morning trade. Soy oil, however, has been down about 3.5% this month and trading in lower territory now. Over to the wheat market. July, Chicago, 569.5. It's 3 1/4 higher for hard red. July, 576 1/4. It's up 3 1/4. And spring wheat, March, 596.5. It's up 2 3/4 in New York. Cotton futures down 12 on the March at 68.36. Chris Swift is with Swift Trading here in the Nashville area. And Chris, great to see you.
Yes,
and great to see you on the final trading day of the year.
This is it. 2024 is over with.
So when you look at this year, how are we going to remember 2024?
You know, I look at it from beef production standpoint. We came into last year looking at a very negative beef production, maybe as much as 14 to 15% under what we traded in 23. And lo and behold, at the end of the year, we're somewhere between a half to above or a half below what same beef production as what we did in 23. 25 is going to be the most interesting year because we have a very fundamental situation taking place where we have greater packing production capabilities, but not enough cattle. So now what we're going to do is, as we have been rationing both cattle and beef, and now we're going to start rationing the producer. We have these prices very, very high. We're fixing to find out whether or not we come in at the first of the year and we either have double topped the market, whereas the rationing has now taken place. There's nobody going to pay any higher price, or are we going to see another round of rationing that could put prices $10 to $15 higher in both fats and feeders from where we are right now? And it's a very poignant question because nobody really knows. Nobody knows how bad that person wants to own that cow.
So I also wonder, will we see as corn prices have really been moving higher, gaining 5% month over month, if that continues to happen, that's really going to squeeze those feeders with higher feed prices, higher cattle prices. Could we be looking at maybe a jam in there?
It's possible. You know, we might have both fuel and feed cost, and now we got interest rates. So everything to produce a pound of beef is higher this month. It was the month before that, and it was the month before that. So we consistently are putting the price of beef up there simply because of our input costs continue to go up. And whereas some of them we have very little control over. Oil is a world market. Corn pretty much dictated by the weather and what we have on stocks. But cattle, whether you want it or not, it's just that decision whether or not you want to go out there and buy it or not. And those feed costs you have, so you have a decision on that. But once you make that decision on those cows, now you don't have any other say-so in it. So you either need to be able to fix variable costs out there or be willing to live with whatever those variable costs end up at as you're producing those cattle.
And if we see this drought really breaking in areas, then we also have something else that needs to be harvested, and that's grass.
Yep.
All right, we'll take a break. We'll come back in a moment. We'll continue this conversation with Chris Swift. Market Day Report continues after this. So live cattle really being dictated by what's happening in the cash cattle market. And I say that, is that a good way to put it, Chris? Because that live cattle contract, that front month, that D's contract, really having to move with what's happening on the cash side?
Oh, yeah, absolutely, because it's still a physically delivered market. So you're going to get delivery, and it's not like they're going to bring them to your front door or anything like that. You're going to get a receipt that says at XYZ feed yard, you now have these cattle, start paying yardage and feed costs for them today. But the delivery process is very interesting. There's very few, even still to this day, about only 2% of all commodities are ever delivered upon. So it's primarily the basis, where can I get it the cheapest? And if I can't get it, then it's the guarantee of the futures market, then at least I know I can get it there.
All right, so we've thrown that idea out there. What's happening in the live cattle market right now? Well, we are higher. That December at 194.50 is up 42. That thing could go higher just based upon what we saw in the cash market last week. February, though, at 190.87, trying to play catch up there as it moves now to closer to that 191 level. It's up 60 cents. Over to the feeder market, and the front month there is January at 261.70, up 7. And we see 261s for March, April, and May contracts. Hog market has been on a tear as well, up 20% year to date, taking the month off. Down 90 on the February at 80.72. And Class 3 milk futures have been moving higher in morning trade, up 4 on the Ds. January, though, 30 higher, 20.73. I wanted to see that January, February, and March contract above 20 because that works its way back into this conversation of protein with the beef on dairy.
Sure, absolutely. And right now we're about, I've heard rumors about 1 million head deficit of dairy replacement heifers. I think the likelihood of ever restoring that is probably not very good because as we have seen in years past, a lot of dairy has to be poured out. We overproduce a lot of times and we end up killing the butter and cheese markets a lot of times because of that overproduction. So similar to what we're seeing in the beef aspect of it, I think expansion would probably do more damage to the markets than it would good, simply because then you have lower prices. Everybody wants the higher prices, so if you begin to increase the supply aspect of it, you're going to decrease the price. So I don't see the dairy industry going in there and making a full-fledged movement to try to replace all these dairy heifers and to grow the cattle herd to any great extent. I think we have got it pretty equal to our demand plus supplies right now.
By the way, am I the only one that's a little, well, surprised? Interested might be a better word here, as our feeding has started to move further north. We're seeing more feeding happening in the Iowa area and around the I-states, but yet we're seeing an increase in the dairy concentrations in that feed area that we used to have in the Texas Panhandle.
Right.
Still strong feeding territory, but dairies have moved south. Feeders are starting to move north. Have you been watching that?
It's a bit of slow progress, and no, it hasn't really caught my attention to be able to comment too much on it, but we clearly see that we need that production all around the United States. Even though we can transport from point A to point B, it's much easier logistically wise to have all that product there. So we see cheese manufacturers being built. Well, the first thing we want is the dairy, so we bring the dairies in right around them.
All right. Some great comments. Always good to see you, Chris.
You as well, Tony. So
Happy New Year.
Looking forward to a new year.
And by the way, today is National Leap Second Time Adjustment Day.
Okay.
Yeah, it only happens during leap years, and this is a leap year, right? And so either in June or in December, they'll add a second. We're not adding a second this year, though.
Okay.
According to the International Bureau of Weights and Measures, they're going to abandon this in the year 2035 because apparently our Earth is now spinning faster than it used. Spinning faster than it used to spin. So we don't need that second anymore.
Okay.
How's that for being confusing?
It's as clear as mud.
How do you celebrate a day that's not even a day and is not going to be here in a few years?
Yeah.
Anyway.
Hey, but we recognized it right here. You couldn't have gotten that anywhere else. All right.
Thanks for hanging on.
Thanks, guys.